Hey everyone, reasonable setups here. So CPI came earlier today below expectations. You can see 2.8 and zero point 0.2 month to month one. So it is below the expectations, and the market actually very much liked it until the New York session opened, right? So you can see here it got a huge spike, more than 200 points on NQ. But right after the market open, you can see that it went out and fully filled the daily gap. So this is a very significant level right here. You can see very much a lot of support here. You can see as well that today was a very rangy price action, so there is no clear direction as of today. But of course, there are some positive signs for the bulls. We will talk about that later. But for today, you can see the markets closed the gap and retraced around that previous day high and currently struggling around that high levels. This green arrow line is the previous day high. And of course, we are waiting for the PPI numbers tomorrow. You can see here, I already marked in my on my chart the CPI liquidity from 8:30, which is very important for tomorrow if we are going to see an uptrend momentum build up, right? So this is the 200 moving average on a 10-minute chart. Let's see if we can reclaim it because it's very important. If you can see uh, the history for the last couple of days, you can see here it's mostly acted as a resistance with some small fake outs, of course. So for tomorrow, we are looking for two trades, right? So we either are taking out this liquidity of the CPI high, or we are taking out this liquidity right here, this huge support. So we can expect something like this, right? Or we can expect something like this, right? To go out and then consolidate and then to go back. So for this week, we can see if you remember from the previous episode, I already said the new week opening gap is still wide open right here. So if there is any bullish momentum, and let's say we tomorrow we take this liquidity and consolidate and then go back to close the uh, new week opening gap, it will be very significant. I mean, for this week, I don't think that is going to happen tomorrow of all these price action, of course, but for this week on Friday, it's pretty much possible, right? It's gonna be huge in case it happens. Let's have a look on the VIX chart right here. Let me open the VIX chart. Well, you see that as we spoke yesterday about the VIX, the 30 area looked like a sell for most of the people, right? And of course, today it crashed currently around 10%. You can see it went below the previous day low, which is here around 26, and it uh, closed the 70%, almost 70% of the opening gap, which is the 2693, if we are precise. Okay, so we can expect some bounce here. We can see some volume imbalance here, and on the VIX side, you remember that almost always all of these volume imbalances are getting closed. So for tomorrow, if there is any bullish momentum, you can expect some kind of spike and then to fade to go back below 24, right? If the PPI numbers are good. And finally, the option flow. Let's have a look on the option flow too. So this is the SPX for today. You can see very bearish exposure on the gamma side, and the delta is not very supportive too. So you can see a lot of downside exposure here. But despite that fact, we can see here the call premium on the premium side on the left mostly dominated today. And you can see here after 11 o'clock, puts started selling off. So puts are getting closed, and it is very much positive for the bulls. And if you open the net flow on SPX for today, you can see those cold spikes right here. A lot of cold spikes, 300, 400 million. This is most probably a puts getting close, right? It means that the bears are taking profit. So it is very much likely we can see some support forming up here and potentially to have some bullish momentum. And let's see the VIX exposure as well, VIX net flow. So on the premium side, you can see some in the money call spikes. So, but I don't think that is important. Calls, we can see all of those out of the money calls are getting closed. Actually, look at those red spikes, right? This is completely a hedging action from the market makers. So from out of the money, they are turning into in the money. So it is very positive for the bulls in the short term, of course, right? And of course, on the gamma exposure, still elevated, 25, and it is still supportive on the monthly side, 20 and 25 right here. I don't think we have too much on the upside for the VIX, and expecting some kind of more or less short-term bounces in the markets.